Between these two sources of equity, which one is cheaper? Ladies and gentlemen, we have three types of, or rather three sources of capital. So we have what we call equity. And somebody in this case here give me components of equity. Equity refers to the owner's capital, the ordinary shareholders' resources. The first one is what here? Retained earnings. So we have here retained earnings here, retained earnings. The ones that we shall really be interested in this case, ladies and gentlemen, that we can use as our sources of capital for equity, we shall be able to get money from what the owners have allowed us to retain in their accounts. So whenever we have good projects, we shall be, in this case here, raiding this source and using that particular resource in our projects. Then number two, we have what we call ordinary shares here, or ordinary share capital. Ordinary share capital. Now, let me ask you a question. Between these two sources of equity, which one is cheaper? Which one is cheaper to raise capital from? You see, retained earnings, already we have this in our accounts. Retained earnings, the money is already in existence, isn't it? You know, anytime you want to raise money through ordinary share capital, what does it mean? First of all, you must advertise. Na pia lazima upembeleze our shareholders sana. So you must, in this case here, get, for example, an investment banker. First of all, will be able to help you craft a very compelling prospectus. It's not easy. Yeah, because at times you may try to issue new shares and there is nobody who is interested, especially if you are making losses. So this becomes very costly because of also the cost of underwriting, insurance, yeah, etc. So this is normally cheaper. So assuming that you calculate in this case here the cost of this, and you get like 10%. The cost of this, of course, they cannot really be very far away. So maybe this could be like 13%. So you see, for example, if the retained earnings you have in the bank accounts are 20 million, so it means that you will be able to spend these retained earnings up to 20 million. At what cost of capital? 10%. Once in this case here you exploit your 20 million, then automatically you will now be able to go to an expensive source. So you're breaking to an expensive source. That is the concept of breakpoint.